In today's show, I'll be breaking down the latest Bitcoin technical analysis as we're currently correcting back in the red. We'll also be discussing Bitcoin miner sell pressure is weakening as Bitcoin withdrawals drop 85%, as well as Bitcoin activity drops to the lowest level since 2010, as well as Bitcoin whole coiners hold above the 1 million mark for the past 13 months. Shout out to all my diamond hand long-term hodlers, hodling a coin. Let's go. We'll also be discussing the latest from on-chain analyst Willy Woo, updating his Bitcoin outlook. He says there's a good chance Bitcoin has already cleared price lows. We'll also be discussing the latest from Jan3 Samson Mow, doubling down on his $1 million Bitcoin price prediction. That's right. In fact, he says we're going to hit 1 million potentially in days to weeks. It's max pain for the most people. I'll be breaking this down for you. We'll also be taking a look at the overall crypto market. All this, plus so much more in today's show.
Oh my gosh, it's finally almost here. JV is going to talk to us. Crypto news is near. I can't stand waiting. There is no debating. I waited all day, maybe I need a life. But Bitcoin is all I can think about day and night. Hurry, JV.
Happy 60 G's, fam. We right back there. If you're new to the channel, very important to smash the likes and smash the subscribe button, hit the bell icon, turn on all notifications, and please repost this over on X. Is greatly appreciated. Today is pod episode number 1684. I'm your host, JV. It is June 28th, 2024. Just a couple of days left here for the month. So let's kick it off with our market watch. As we do each and every day, we got Bitcoin back in the red, Ethereum back in the red, while XRP, Cardano, and AVAX are pumping and in the green. And checking out coinmarketcap.com, we're sitting at a 2.24 trillion market cap. And the Bitcoin dominance is 52.9%. The Bitcoin market cap is back down under 1.2 trillion. And the top gainers in the past 24 hours in the top 100 is Akash Network, ENS, and Aave. Below that, EOS, different EOS. Yeah, I meant ENS before, my bad. And then we have EOS, Oasis, and Litecoin. Which also y'all most bullish on for this bull? Holla. And checking out the crypto bubbles to get a visual perspective on the daily. Unfortunately, majority of the market bleeding in the red. And if we zoom out on the monthly, even worse, some of these coins down 20, 30, 40, 50 plus %. So bloodshed in the alt market. And checking out the crypto greed and fear index, we're back neutral at a 47. Yesterday, 40 in fear. Last week at 63. And last month at 72 in greed. So there you have it, my crypto fam. Let me know where you feel this Bitcoin price action will likely close for the month. Here's what we're going to do. We're going to dive into today's Bitcoin technical analysis. The headline reads, Bitcoin price support thinning below 60,000 while Bitcoin ignores cool PCE. That's right. Here you're looking at a 1-hour chart. Bitcoin shrugged off U.S. macro data June 28th as doubts lingered over the strength of 60 G's, baby. That's right. Trading View showed Bitcoin price circling. At this time now, we're down to 60,000. After the Wall Street Open, it was 61. So we're on the heading down right now. The latest CPE index, known as the Fed's preferred inflation gauge, conformed to expectations across the board, 2.6% year on year. Core PCE showed the lowest reading since March 2021. PCE data expectedly came in cooler. Personal income slightly higher than expected, but cooling personal spending. And while Bitcoin and alts barely moved on PCE, Scoo noted declining retail sales potentially forming a volatility catalyst in future amid of a 17% rout in the stock of clothing giant Nike, quoting them here. U.S. markets will focus on September's rate cut and pricing and Trump presidency, as well as how it will look and impact industries. And market sentiment continues to favor the Fed cutting interest rates, a key liquidity event for risk assets and crypto. At the September meeting of the Federal Open Market Committee, you can see the latest data from the CME Group FedWatch tool put the odds of a cut at nearly 68%. on the day. And turning to Bitcoin itself, traders saw little change in circumstances as Bitcoin edged sideways just above 60 Gs, quoting Rec Capital. Bitcoin daily closed below the bull flag top, so it is still sentenced to additional consolidation inside the pattern. However, price is only one daily close above the bull flag top, away from a breakout. Let's freaking go. And for trading resource material indicators, there was cause for concern. Bid support below 60,000, it warned, is a dissipating. Quoting them here, Fire Charts shows a block of Bitcoin bid liquidity moving up to 60 Gs, but the ladder of support below it is thinning, expecting more volatility up to and through the monthly close. Let me know if you agree or disagree with that sentiment, and let's pull up the live charts. Right now, this is the 1 month. We're going to start here. And my apologies if I wasn't showing my screen that entire time. I intended to show my screen, and I just realized I may have not have been. But nonetheless, my bad. Pump watch. As you can see here, this is the 1 month chart live in the flesh via TradingView using Coinbase. You can see a few different indicators. On the bottom is the RSI followed by the MACD. Now, you can see we've had quite a few consecutive green candles on the monthly. It looks like 1, 2, 3, 4, 5, 6, 7, followed by one red, followed by another green, another red, and we're going to see what we print here in the next couple of days. Let me know if you feel it'll be a bullish monthly close or it's going to be stagnant, kind of like where we're at. And now we're going to zoom in, get a different look and a different perspective. Go into the 1 week chart. You can see on your screen, the 1 week shows a bullish pennant target sitting at, looks like the 90,000 mark. And then we have a big target sitting at 106,000. So this is the 1 week. So there's a lot of action happening here. I think obviously the more zoomed out we are, the more bullish everything is going to look. And that's why they say when in doubt, just zoom out. And if we enter the 1 day chart, let's check this out. We do have a lot of action happening here. The most bullish target on the 1 day chart is also a bullish pennant at 106,000. We also have the red target you can see on your screen at 72.9. And then we have a couple of bottom targets, one at 53.6. And then we have the pink one at 47.7. And let's zoom in a little more. So that's the 1 day. Let's check out the 4 hour. Again, this is live in the flesh right now, these charts. You can see a big fat target in the red, sitting all the way up at 73.5, which would take us right around price discovery, which is currently 73.8, which we tap mid-March. And you can see a couple of top targets, and then we have a bottom target at 58,600. And let's look at one more chart. We're going to look at the 1 hour. Zoom in a little bit. And you can see it's kind of been boring and sideways here, but we are definitely dropping. We have that big red candle in the previous hour. We do have a target sitting all the way down at 58.6. So that's the level to hold, and that's ultimately the recent bottom. So we'll see if that holds up. Let me know if you feel we're likely to correct lower than this, or do you think will likely start jumping and spring back like a coil? Let me know your thoughts, family. Right on. Well, we appreciate the feedback. Let's dive into our next story of the day and discuss the latest here with the Bitcoin miners. The headline here reads, Bitcoin miner sell pressure weakening as Bitcoin withdrawals drop 85%. That's right. Bitcoin miner withdrawals decreased nearly 90% since the time of the halving on virtually 420. In a quick take post, on-chain analytics platform CryptoQuant suggested mining selling pressure is weakening. That's right. Bitcoin miners have spent several months adjusting to the new economic reality after the April halving, which cut their subsidy per mined block by 50%. Network fundamentals reflected a reshuffling taking place since, with both hash rate and mining difficulty dropping from all-time highs. Quoting Dan Crypto Trades, after the Bitcoin halving, mining rewards were cut in half. So older model mining machines were no longer used as they were no longer cost effective. Quoting them again, as a result, mining activity decreased and miners began selling Bitcoin over the counter transactions to cover mining operation costs. Now, the hash rate, in fact, reflects a state of capitulation amongst the miners per the hash ribbons metric, which is the 30-day moving average hash rate below its 60-day equivalent. And while that in of itself traditionally treated as a buy signal by traders, Crypto Dan already sees the process winding down. Quoting him again, the current market can be seen as being being in the process of digesting the sell-off. And unfortunately, the quantity and the number of the Bitcoin miners are sending out their wallets, which has been rapidly decreasing recently. In other words, the selling pressure of miners is weakening. And if all of their selling volume is absorbed, a situation may be created where the upwards rally can continue again. And also, the data puts the peak number of withdrawals from known miner wallets at more than 53,000 on April 10th, 9 days before the halving. And since then, that figure has been slashed to around 8,000 as of June 27th, which is an 85% decrease. Quoting them here, positive movements in the crypto market can be expected in the third quarter of 2024. Meanwhile, the hash price raises concerns over the small Bitcoin miners. Between June 8th and the 24th, the hash price, which reflects expected revenue per exahash, dropped by 50%. Data from Hash Rate Index puts the hash price at 0.048 as of June 28th. Quoting the analyst here, the decline in the Bitcoin hash price has recently put less efficient miners under pressure. Since the halving, the hash rate has started declining, but the current price correction further reduces the miners' revenues. So there you go, yo. Bitcoin mining for the future, for the win. Let's go. But anyways, yo, keep the comments flowing. It's appreciated. But let's dive to our next story, discussing wallets. Let's break down a little bit of the wallet activity happening right now. Bitcoin activity drops to the lowest level since 2010. That's right, 2010, yo. 10 is a very cool number, though. Gotta love 10s and 11s. The ratio of active Bitcoin addresses has plummeted to its lowest level since November 2010, according to on-chain data from Into the Block. The weekly active wallet ratio dropped to a low of 1.22%, while peaking at 1.32%. The highest month's ratio was last seen November 2010. That's 14 years ago. Whoa. Additionally, the total number of active wallets has reached multi-year lows. The week of May 27 recorded 614,000 active wallets, the lowest figure since December 2018. A declining active address ratio indicates a lack of buying and selling activity amongst Bitcoin hodlers, suggesting a phase of market consolidation. Now we have Juan Pellicer, senior researcher at Into the Block, attributing Bitcoin's decreasing wallet activity rate to weaker retail participation than the previous cycles. Quoting them here, this year's run to a new all-time high was driven by institutional capital instead of retail investors. And he makes a good point. Previous cycle, the all-time high was pure retail. This time, it's all about the institutions. He continues, the wider economic situation could have played a role in the retail not making as many crypto investments as they've done in the past. The drop in activity rate comes as investors brace for a period of rising whale movements, including the Mt. Gox trustee planning to start distributing payments to creditors next month in July, right around the corner. Some large hodlers, including those linked to the governments, were also spotted partaking in selling activities. Quoting Pellicer again, due to the concentration, much of the bearish trading activity is being performed off-chain, which doesn't significantly impact on-chain addresses activity statistics. Now, are runes struggling? Let's discuss it. The drop in activity could appear counterintuitive to the launch of Runes, fungible token protocol introduced to the Bitcoin ecosystem in tandem with the latest halving on 420. Runes was expected to provide an alternative revenue channel for the miners, which it did on the first day as miners pocketed record high trading fees on halving day, which we ushered in live and in the flesh on the stream. Let me know if you were on our Bitcoin halving celebration watch, family. But transaction fees have since normalized the pre-halving levels as miner reserves, which represent the new Bitcoin held by the miners, are also at 14-year lows. Now, Pellicer also said that activity on Runes cooled off, though due to the cyclical nature of such assets. Their current state represents a temporary lull rather than a permanent decline. Meanwhile, recent attention to crypto has been focused on the meme coins and celebrity tokens, which are attracting speculators who are gambling on larger gains. And though Bitcoin is widely known for the volatility, it is currently can be considered stable when compared to the lower cap meme coins. Of course, Bitcoin is going to be the most stable in comparison to all of the alts because, number one, it has the largest market cap with over 50% of the market share. So just common sense right there, family. So typically when we have a correction in the market, maybe Bitcoin goes down 2% like today, but some of the alts can go down 5, 10, 15, 20, 30% like it ain't no thing. So be careful out there when you're Isha coining. But anyways, next story of the day, let's keep it moving, eh? How many whole coiners are here? Put a 1 in the live chat if you're a whole coiner. Let me know. We'll celebrate your success. So here we go. Bitcoin whole coiners hold above the 1 million mark for 13 months. So that means there's virtually 1 million whole coiners on the planet that have been holding for the past 13 months. That's right. The number of the Bitcoin whole coiners, a name given to addressing holding more than one biddy, has remained above 1 million for the last 13 months. The 1 million whole coiner milestone was first reached May 13, 2023, when Bitcoin was trading at 27 Gs, according to Glassnode. This number of whole coiner wallet addresses reached an all-time high January 1st of this year, with just over 1 million wallets holding one or more biddies, according to Glassnode. Today, despite the Bitcoin price rocketing to double that in May of last year, the number of wallet addresses holding more than one Bitcoin stands at just above 1 million. I mean, look at the chart. It shows you the 1 million whole coiner milestone was first reached May 13th, and it continues in the banana zone to the moon. The milestone of 1 million Bitcoin wallets indicates a significant upward trend in Bitcoin ownership. However, it is important to note that a single Bitcoin wallet does not necessarily correspond to one individual. That's right. Many crypto investors have multiple Bitcoin addresses, and other addresses belong to major institutions like crypto exchanges and investment firms that typically own large sums of the biddies. Of the 19.7 million Bitcoin currently in circulation, 2.48 million of these, worth 152 billion, are held on major centralized exchanges such as Binance and Coinbase. Binance being the largest exchange in the world, Coinbase being the largest exchange in the States. Additionally, a whopping 3 million BTC, worth 80 billion, and accounting for 17% of the total circulating supply, are lost forever gone, family. That means we all just got a raise. When Bitcoin first launched on Jan 3rd, 2009, only one wallet address, which was Satoshi's, held more than one Bitcoin. Like, whoa. This number quickly ballooned to 30,000 by the beginning of 2010 and grew to an increasing rate for the next 8 years. And there are times when the Bitcoin whole coiner wallet addresses also dip significantly, falling by 30,000 or more. This happened on 3 separate occasions, once between March and May of 2016, between September and December of 2018, and during the depths of the persistent bear market, and once more between February and July 2021, during the sharp sell-off after the meteoric rally months before. So there you go, por favor. Next story, family. Here's the latest from on-chain analyst Willy Woo. Then we'll be discussing the latest from Jan3 founder Samson Mow with his $1 million price prediction. Then we'll dive into the live Q&A. And don't forget, there is a live poll up right now in the chat. Let me know when 1 million BTC. Don't be shy. So yeah, this headline reads, Willy Woo updates Bitcoin outlook, says a good chance Bitcoin already cleared price lows. Let me know if you agree with that. He tells his 1.1 million followers on X that the short-term technical indicators point to a Bitcoin price reversal. Quoting the analyst here, 2 hours away from the TD9 reversal on the daily candles. If this plays out, we go into a hidden bullish divergence to correct for the overselling of the market. After that, Bitcoin is not out of the woods. We just need to see how much speculation got cleared out the system. Without purging futures open interest, the system is not ready to move up. Now, if you're not familiar with the TD9 reversal, it's related to the Tom DeMark sequential indicator, which traders use to predict potential trend reversals for tokens based on the closing prices of their 13 previous bars or candles. When the TD sequential records a 9 consecutive candles above the closure of the 4 prior candles, it then prints a TD9 signal. We'll also note that 54,000 is the next layer of liquidations for Bitcoin, quoting him here. And to do that, it is so far below the short-term hodler price that it would tip Bitcoin into the bearish phase. Short-term hodler price is the line in the sand between the bull and the bear regimes. This is hard to do within the macro structure. So there you have it, family. Let me know if you agree or disagree with on-chain analyst Willy Woo. And do you think the bottom is in? And I think that bottom more recently was in the $58,000 range. Now let's discuss our feature story of the day. Samson Mow doubles down on his $1 million Bitcoin price prediction. Shout out to Samson Mow of Jan3. In fact, he recently shared this. It's actually quite hilarious. The Bitcoin therapist posted this the other day. This is the way. Guys literally only want one thing, and it's freaking disgusting. Please go to $1 million Bitcoin. Please, God, send Bitcoin to 1 million Satoshi. Please. 1 million is all I asked for. It's all the guys want. It's all what the broskies really want. So yeah, the girls got it all twisted. They missed the boat on that one. So it's kind of hilarious. But anyways, Samson Mow, he tweeted, $1 million gang. Where my 1 million gang at? Holla. And shout out to Samson. I'm going to read you some more of his tweets, and then we'll dive deeper into the story with his latest post here. So he also recently shared, everyone selling Bitcoin now will regret it within a year. I am talking the biggest mistake of my life level regret, deathbed, lemonade. What does that say? Lamentation level regret. Good Lord, don't be that guy. You know what I mean? He also wrote, here's why we're going to 1 million Bitcoin in days to weeks. It is max pain for the most people. Just note, this tweet was back 3 days before the ETFs went live. It was on January 8th. But anyways, it's a very interesting thread. So I'm going to read it to you nonetheless, because max pain is still very doable. And what's going to happen with max pain? Bitcoin's going to go parabolic. There's also all these other tweets I pulled up where he's predicting $1 million. So let's start with this infamous thread from January. So here we go. Bitcoin has a way of doing what we least expect, and in the most disruptive way. For example, at Jan3, we have many plans and meetings set for 2024. 1 million Bitcoin would derail everything. Number one, ideally, we have a good couple of years to onboard nation states at Jan3. Fast 1 million means we're out of time. 50 countries reach out and frantically we're overloaded. Although the careful planning and proposals out the door. Just smash buy-in, BTC, and no sleep for the team. Number two, fast 1 milli Bitcoin means that Plan B, stock to flow model, breaks again, just when it was looking like it was going to track correctly. Max pain. Number three, Lightning, referring to the Lightning Network, is completely unusable for anyone not using a custodial wallet or Aqua Bitcoin. Fast 1 milli means fees are super high in dollar terms. No new Bitcoin users can afford to create a new Lightning wallet. Max pain. Number four, fast 1 million Bitcoin means Michael Saylor and MicroStrategy never reached their goal of stacking 1% of the Bitcoin supply. Well, guess what? They did just achieve that goal more recently, but I know Saylor upped his goal for MicroStrategy to have 5% of the circulating supply, so that doesn't mean 200,000 biddies. 1 million Bitcoin is 5x 200,000, just FYI. But at the time, so close, so very close. Max painish. Upside as MicroStrategy is now up. The top 30 most valuable companies in the world. Number five, El Salvador and other countries miss the window to issue Bitcoin bonds and accumulate substantial stacks of Bitcoin at sub 100K. The IMF debt still looms. Max pain. Number six, Christine Lagarde and Jay Powell and many highly regarded economists lose their jobs, but I think we're okay with this one. Preach! Hyper-Bitcoinization and fiat hyperinflation begins 1 to 2 years after 1 million biddy. Max pain. Number seven, Peter Schiff and gold bugs suffer a collective mental breakdown after Bitcoin goes to 1 million fast. Gold is still hovering around 2,000. Max pain. Number eight, the plebs are not immune either. Many will be stuck with a number of unspendable UTXOs worth 500 to 1,000. Many others, not you of course, will sell at 100,000 only to buy back the biddy at 500,000 per coin. Max pain. Number nine, 8 billion people on the planet just missed the most important opportunity of their lifetime to get into the Bitcoin when it would have made a significant economic difference. They can now only work to earn Bitcoin. I think this is the biggest one. Max pain. And number 10, the entire legacy financial system will need to be very quickly reorganized around Bitcoin as the new base. Business will need to be able to accept Lightning payments. Companies will have to rapidly convert cash reserves to the biddies, and none of them are remotely ready. Max pain. So my point is that the probability of Bitcoin making an unexpected move that results in max pain for the largest number of people is the most likely outcome. That means $1 million Bitcoin fast. So there you go, And also, because of these reasons, plan accordingly. And he's referring to the post he did from December 16, 2023. The ETF approvals aren't priced in. The halving isn't priced in. More nation state adoption isn't priced in. Renewed QE isn't priced in. The multiplier isn't priced in. The Veblen effect isn't priced in. All of this happening in, and it isn't priced in. We could probably throw that into a jammy jam right there, some bars from Samson. But nonetheless, family, let me know your thoughts on that, and let's dive a little deeper into the brand new article just published. This one was just published like today or yesterday, so I want to read you the newest. Here we go. Outstanding Bitcoin supporter Samson Mow has taken to his X handle to remind the global crypto community about his expectations for Bitcoin to reach the 1 million milestone. Earlier in the month, Mow predicted the world's leading crypto was going to reach 1 milli next year. Later in the interview, however, he added that even if it does not happen in this year or the next, the historic price peak will be taken by Bitcoin very soon. Mow reposted a tweet urging Bitcoin to skyrocket to 1 million. The Bitcoin maximalist added his comment to the tweet, writing, 1 million gang. Where my 1 million gang at? Holla, family. 4 days ago, Mow tweeted he expects Bitcoin to surge to 1 million, even if many crypto users doubt that. Samson Mow's 1 million Bitcoin price prediction is based on the fact that Bitcoin has been sucked from the market since the middle of January. Thanks to the SEC approving the Bitcoin ETFs. After the launch, they immediately started scooping up large amounts of the Bitcoin daily. Until the middle of April, they bought roughly 10,000 biddies per day, which was a lot more than the miners produced on a daily basis. And aside from that, many times Mow underscored that this year, the fourth Bitcoin halving was going to take place, and it finally did in the second half of April. Once the block rewards were reduced by half down to 3.125 BTC, the ETFs continue absorbing Bitcoin from the market. Thus, as Mow put it, creating a demand shock. In the meantime, he also pointed out that the halving in April created a Bitcoin supply shock. Adding to his theory, once these two Bitcoin shocks meet, Bitcoin will go to the moon. Now, Samson believes it will happen all of a sudden and as a result of an Omega candle, which just might be preceded by the Bitcoin Godzilla candle. So there you go. An Omega candle, FYI, is a $100,000 price increase to the Bitcoin price action on the daily chart. And looking at the price action right now, we're just maintaining above 60 G's, baby. Welcome to the Q&A segment of the live show. Let me know your thoughts regarding Samson Mow's 1 milli price prediction. It's always greatly appreciated. I'm going to do my best to read everyone's comments out loud. My personal 2 Satoshis. I think 2029 is when we're most likely to hit that 1 million target. However, I am open to the fact Bitcoin has no top, as fiat has no bottom. I'm open to the facts. Max pain occurring. I'm open to the fact it can happen this year. I'm not saying that's the most probable scenario, but I'm open to that fact. It can happen next year. It can happen before I'm anticipating it. You feel me? Let me know your thoughts.